Live. Hello everyone, thank you for joining our monthly tax planning webinar. I'm Jamal Khan, I'm a senior tax partner at Churchill Tax, and I've got our tax director Hazel Johnson. Hazel is a tax barrister and very knowledgeable on tax matters, very technical. I'm a chartered tax advisor and fellow chartered certified accountant. Today's session is going to cover stamp duty on property acquisitions and the new reliefs that are available. Very, very important for landlords who are looking to incorporate or who are looking to transfer their properties into limited companies. There are some very good reliefs available, which Hazel will cover in today's session. Hazel, would you like to make a start?
Okay, I'm going to share my screen with you. Okay, so this is our monthly seminar on tax saving tips. And about Churchill Tax Advisors, we're a specialist tax advisory firm based in London and Essex, and we offer national coverage. We specialise in tax, including income, business and inheritance tax planning, tax investigations, dispute resolution and tax tribunals. We do Code of Practice 9, Code of Practice 8 and Proceeds of Crime Act investigations, VAT and stamp duty planning, capital gains tax planning, UK and offshore trusts and tax planning, and disclosure of undeclared income. We provide specialist tax advice to accounting and law firms in relation to their clients on areas where they do not have the relevant expertise. So as Jamal said, what I'm going to talk about today is stamp duty land tax, as it's currently an area of great interest to people. And we're having a lot of inquiries, particularly as a result of the declared stamp duty land tax holiday that goes on until March. So what I'm going to talk about is the stamp duty land tax holiday, the 3% surcharge, issues to do with incorporation, multiple dwellings relief, and also the commercial rates that can apply to acquisitions. So broadly on stamp duty land tax, there are two regimes. There's the residential and the non-residential or commercial rates. Residential is still taxed at higher rates than commercial, and we currently have a stamp duty land tax holiday that applies until the 31st of March 2021, and under this stamp duty land tax holiday you'll pay 0% on acquisitions of property up to £500,000, and then you're paying the usual rates after that. So that's 5% up to 925, 10% up to 1.5 million, and 12% after that. And when I say, 10% up to 1.5 million, we no longer paying on a sort of a slab tax basis where you used to pay 10% on the whole of 1.5 million. We're now paying stamp duty land tax on a band basis. So your first £500,000 is always going to be tax-free. And then it's the difference between, say, 500,000 and 925,000 that's taxed at 5%. Under the old regime, of course, all of it would have been taxed at 5%. So when we're talking about the stamp duty land tax holiday, which is very welcome, we must also not forget about the 3% surcharge that applies to acquisitions of additional properties. So if you're not replacing your main residence, that is selling it and buying another one, then the 3% additional rate will apply to the transaction. And that applies even if it's a transaction that's otherwise covered by your stamp duty land tax holiday. And it also applies to company purchases of residential property if it's going to be let out. If the property is not going to be let out and you're choosing to buy a property through a company, not for a property rental business, there are punitive 15% rates that apply, and obviously nobody is going to be doing that. So if you're looking at buying a £500,000 house, the 3% additional rate will give you a stamp duty land tax charge of £15,000. What should also be borne in mind is if there's an overlap in the period of ownership between your main residence and your new acquisition, and you dispose of your first main residence within a 3-year window, then you can reclaim the stamp duty land tax that you've already paid, your 3% surcharge. And you have to do that within 3 months of the sale or 12 months of filing your stamp duty land tax return, whichever is the later. So although you've had the cost, the cash flow issue of paying that 3%, you can at least claim it back if you manage to make the sale within your three-year window. When we look at incorporation, so stamp duty land tax is generally charged on consideration, and consideration can mean sort of a purchase price, or it can mean taking on responsibility for a mortgage. But in the case of an incorporation, different rules will apply, so that you pay stamp duty land tax on the market value of the property that's incorporated, rather than any price paid or the mortgage taken on, provided this is your personal company rather than an unconnected company. And the 3% surcharge will also apply in these circumstances. There are reliefs that apply when you incorporate a partnership, so that none of these stamp duty land tax charges apply. But there is also anti-avoidance legislation that applies when this occurs, so that if you've just formed a partnership and you've been running it for a short period of time, and then you look to incorporate to take advantage of this relief, then the relief can be disapplied. So that's something to be cautious of when looking to incorporate property rental business that you've been running as a partnership. There are also a couple of other reliefs that can apply, particularly when we're looking at sort of bulk purchases of property rental assets. So when we're looking at multiple dwellings relief, and this applies to residential properties, if you're acquiring more than one dwelling, or you're acquiring dwellings in linked transactions, so you have the same seller and the same purchaser, what you can do is pay stamp duty land tax on the average consideration. So what you would do is you would take the properties and you would essentially add up their value, divide them by the number of properties, calculate the stamp duty land tax that's due on that average, and then multiply it by the number of properties you have. So if you have one property that's very expensive and say 9 other ones that are relatively cheap, you can effectively reduce the stamp duty land tax you're paying on that one expensive property. And there is a minimum charge of 1% if the effect of doing doing that calculation is to reduce stamp duty land tax to nil. Again, it has to be borne in mind that the 3% surcharge can still apply if it's not your main residence. And obviously, in the case of a multiple dwellings relief claim, then we are very definitely talking about acquiring properties in the not to replace your main residence, but as a sort of a commercial arrangement. The other consideration is commercial rates. So commercial rates apply where you are acquiring something that isn't a dwelling. You can also these rates also apply where it's not suitable to be lived in as a dwelling. So if you've got something that's in the process of being developed and is unfit for human habitation, but it's also extended to situations where you are purchasing 6 or more dwellings. So those can be residential properties, but as long as you are buying more than 6 of them, then you can claim the commercial rates, and the 3% surcharge does not apply in these circumstances. And these rates that apply are different to the normal residential rates, and the different rates apply. So you have 0% up to £150,000, 2% from 100 on the next £100,000 worth of value, and then 5% on any excess over that 250,000. So the question is, which of these reliefs are going to give you the best result in any in your circumstances? Now, currently, multiple dwellings relief is going to give you a better result than a commercial rates in most circumstances, because the stamp duty holiday applies. So if you're dealing with properties under £500,000, you're paying 3% on a transaction, whereas if you had multiple dwellings relief and you're talking about an average consideration of £500,000, then you're going to be paying 5% or thereabouts on that transaction. This could change back after the stamp duty land tax holiday ends. And it should be borne in mind that it's anticipated that they're going to introduce an even bigger surcharge for people who are not resident in the UK acquiring property after the stamp duty land tax holiday. So they're all going to be paying an extra % of stamp duty land tax. But what this makes clear is that you should always check the numbers and details of the transactions to see which of the 3 potential regimes could apply to your transaction, because unless and until you do that, you don't know whether it is better to claim normal stamp duty or to pay normal stamp duty, to pay multiple dwellings relief, or to be paying commercial rates. And of course, that doesn't preclude the fact that you may not have a choice, because if you have property that's mixed use, if it's got if we were talking about flats with a shop underneath it, or a house that has got land that is being used, say, for agricultural purposes, then it may be that only the commercial rates are available to you and not the residential rates. So, in summary, the stamp duty land tax holiday is a valuable relief at the moment, but it must be borne in mind that property investors are still going to be paying the 3% surcharge, and you are not going to be able to go and acquire properties up to £500,000 with no stamp duty land tax. It's only people who are buying a main residence, very, very broadly, who are going to be in that position. If you have bought a replacement main residence within 3 years, then you should consider making a repayment claim of that 3% surcharge. If you've paid your 3% surcharge and you have now decided that you're going to occupy something you've purchased as a main residence, it may be that 3% surcharge can be reclaimed, provided you're within the time limits. That's just a slide with our details on. As we say, Jamal is a tax expert with 24 years of experience, and I'm a tax barrister and a lawyer with slightly more tax experience. And those are my contact details so that you can reach us if you have any queries. I'll stop sharing my screen now and we'll see if anybody has any questions.
Great. Thank you, Hazel. That's very, very informative and very concise details. I think hopefully users will find this very useful, or the audience will find this very useful. One point, I mean, we've got a couple of questions here, but one point I would like to also make is that at present we are able to get refunds for clients where they have paid additional 3% on surcharge on a property. They've acquired the property in the last few years, last 2-3 years, and they have paid the additional 3% surcharge. Now, to qualify for the refund, I mean, there's quite a lot of process that we have to follow through with HMRC. It takes a long time. It's a process. But the underlying criteria is that if you've had to do any major refurbishment work to a property when you acquired it and you paid the additional 3%, the additional 3% could be 20,000. We're just making 30,000, 40,000, depending on the value of the property. We can potentially get that money refunded for you. We are applying for £120,000 of refund for a client that bought an expensive property recently. And that would be a substantial amount. So if that's something that you would like us to consider, get in contact with Hazel. You've seen her email, or get in contact with me, and we can discuss your specific circumstances and whether you're eligible and how long the process takes for you to get a full refund. I'm not talking about the full stamp duty, but we're just talking about the 3%, the additional 3% that you paid on that property. Few questions, Hazel. There's a question: if you're buying a property with someone else who also owns a property, so a 3% surcharge is applicable, does the overlap period of 3 years to claim stamp duty still apply if both properties are owned previously or sold?
That's an interesting question, which is normally a sign that somebody's about to say it's all a bit complicated. So if you're buying a property with someone else, you would both have to pay the 3% charge, because the higher rates apply if one of you has to pay the higher rates. But yes, the overlap period of 3 years to claim stamp duty would still apply. You may be in a position where, so if two of you are buying a property, but only one of you had a previous main residence, you would still both have to pay the 3% surcharge. So then the 3-year overlap period is going to refer to the person who has got the main residence. If both of you are having to pay if both of you have previous main residences, then I think that you would be able to you would have to reclaim your 3% if both of you have sold your previous main residences, because, as I say, if one of you has to pay the 3% surcharge, then both of you have to pay the 3% surcharge in most circumstances. So yes, it would follow through from that both of you have got to sell your existing main residences and within the 3-year period. Also, I noticed that somebody's asked if you get a copy of the recording, and the answer to that is yes.
If you have registered for this webinar, you will receive an email tomorrow morning once our system processes it. You should be looking out for an email tomorrow morning with a recording, and we will be sending this by email and social media as well. Hazel, do you want to cover the next question?
If a property is gifted, can any reliefs be claimed? So generally speaking, stamp duty land tax isn't payable on a gift, because stamp duty land tax applies where consideration is paid. So if you give a house to someone, then there should be no stamp duty land tax. However, if the person you're making the gift to takes on responsibility for the mortgage, then at that point they're giving you some consideration for the transfer, and the stamp duty land tax will be payable on the value of the mortgage, not on the value of the property, assuming that we're talking about transfers between people and not to companies, because obviously a gift to a company is generally going to come within the rules I talked about, where the market value of the property is treated as the consideration and you get your 3% surcharge. But very broadly, gifts are not subject to stamp duty land tax.
Then we've got a question, what about the other side of the coin, namely selling existing owned properties? If you're selling properties, then you've got nothing to, stamp duty is not your responsibility. It's the buyer that pays the stamp duty, not selling. Unless you are looking at incorporating and transferring your properties into a limited company, then there are certain set of rules that apply, which Hazel's briefly covered. But generally, you would be looking at paying stamp duty if you're putting it into a limited company. And we can, as Hazel did the analysis, you can look at multiple dwellings relief, or you can do the commercial. With multiple dwellings, you can pass until March 2021. You don't have to pay the stamp duty if it's properties up to 500,000, but you've still got to pay the 3% surcharge. Otherwise, the sellers do not worry about the stamp duty. Right. There's another question from the same gentleman. What are these? Hazel, do you understand the question?
No.
Well, maybe if you can clarify, we will try and address your question as much as we can. The next question is, to claim the 3%, do I need to have sold a previous house, as I have not? If yes. That would be, yes, you need to sell the house which is your main residence.
And if you're outside of the 3-year period, no, I don't think you do have a case. I mean, I think the rules on that are very clear.
Okay.
I would say it might be worth having a conversation with someone, because there may be a difference between when you exchange contracts and when you're completed, and that may affect whether you're actually within or without the 3-year period. If we're talking about something just outside the 3-year window, if it's 4 years or 5 years, then no. And somebody then goes on to say, if I understand this correctly, you're saying if my mother wanted to gift her house to both me and my brother, there would be no stamp duty. That's right. Assuming, as I say, you're not taking on responsibility for a mortgage, there would be no stamp duty land tax. However, there would potentially be capital gains tax, unless the house she's gifting to you is her main residence. If it's not, then you'd have to look at the capital gains tax position, and there would be an inheritance tax exposure, because if she died within 7 years of making that gift, then there could be inheritance tax due on the value of the gift, depending on the value of the gift and the size of her estate at the time of death. But stamp duty land tax, you would be right.
Yeah, I mean, this is a very, very good point, Hazel, and a lot of people there are so many different taxes that can apply in any situation. So the question that Johnny asked was about one gift and about stamp duty, but you forget about the capital gains tax, you forget about the inheritance tax. you forget about the reservation of benefit. So there's quite a few things that you need to consider, and that's why it's always best to speak to a specialist. You can speak to Hazel. You've got her email address there, and yeah, we do get people who have gone to say, a solicitor and transferred a property from their name to a limited company for £1, and because for £1 there was no consideration, and therefore, or gifted a property from one person to the other for £1, and they were assured that there would be no stamp duty, but then they didn't realise there was capital gains tax to pay. So you've got to be very, very careful. Next question. So it's from the same gentleman who asked about what are these. So if the house I'm selling has history of residential and part for buy-to-let, if I sell it, how capital gains tax will work? I mean that's the capital gains tax will, if you haven't been living in the property, or if you bought a house say 10 years ago, you lived in it for 3 years, then you moved out, you rented it out, so you'll get relief for the first 3 years that you lived in it, and the last 9 months, but the rest will be subject to capital gain tax, and that's very important. There are some exemptions available, but the exemptions are reducing as time progresses. Exemption. And then new rules are being brought in, but it's worthwhile having a conversation with us, and then we'll kind of guide you on how the relief is calculated and how much relief you're entitled. If there's any planning that you can do to completely eliminate the tax if possible. Right, next question. We've got to finish in 3 minutes. First-time buyer purchasing buy-to-let property, do they benefit from a 3% surcharge? It's not the benefit of the 3% surcharge. The 3% surcharge is a liability. It's not a benefit to anyone.
And the answer to that is, if you're a first-time buyer, it doesn't matter what you're buying. If it's your only property, then you don't have to pay the 3% surcharge. But then if you then go and buy a main residence, you would have to pay a 3% surcharge on that. So it's just essentially a surcharge on paying, on having more than one property. So if you buy one property, you don't pay the surcharge. If you're buying 2 properties, then your second purchase, you will pay the surcharge. It's only if you've got an overlap between your between a main residence. So say you're changing a job and you have to go and buy a house somewhere else in the country. You're going to be remote commuting. But say you did that and you haven't managed to sell your first house, then because they want to be helpful and allow you to move around the country for reasons to do with just having to move your house and relocate your family, then you have that 3-year overlap period and the opportunity to make a refund. But for everybody, for any other situation, if you're buying a second property, you will be paying the 3% surcharge. So the question is it your first property? No surcharge. Is it your second property? Surcharge.
Right. Somebody's asked for Hazel's email address, which I've just posted on the in the room. And yeah, I think we are done. I'll just post my email as well. If you've got any questions, you get in contact. We are here to help, as always. Right. Excellent. So Hazel's email and my email there. Yep. Telephone number is 0207 1998 1834. And thank you everybody for your time, and hopefully we'll see you again in a month. But our colleagues from the tax investigations team will be doing another webinar in 2 weeks' time. Thank you.
Okay then.
Bye.
Goodbye.